the figures presentation, and we're very excited to also have Nigerian breweries come leverage our platform to make presentations about their finances to this capital market stakeholders. It's our pleasure to welcome the executive management team from the Nigerian breweries, also hosted by the executive management team from the NSE. It's going to be very interactive today. We expect that you will have questions, and would please ask that you use the Q&A chat box as the event is going on, in case you have any questions. The CEO and also the finance director from Nigerian Breweries will be willing to do justice to the questions immediately after the facts behind the figures presentation. Just by way of introduction, I would like to welcome the CEO of Nigerian Breweries, Mr. Jody Berubel. I would also like to welcome the finance director, Mr. Rob Clenjon, and all other members of the executive team who are presently on the call. I want to say thank you for joining today. I would also like to welcome the team from the Nigerian Stock Exchange. I'll start by welcoming Mr. Olumide Bolumole, who is the divisional head of listings business. I would also like to welcome Mr. Jude Chiemeka, who is the divisional head of trading business. Welcome, sirs. My name is Tobi Oyewole. I'm going to be the anchor person for today's program, and I'm joined also by my colleagues from primary market and also from the corporate communications department. To get us started in this event, I would like to invite Mr. Olumide Bolumole, the divisional head of listings business, to deliver the opening remarks. Mr. Bolumole.
Thank you so much, Toby. Good afternoon, distinguished ladies and gentlemen. It really gives me great pleasure to welcome you all to today's Facts Behind the Figures presentation. On behalf of the council, management, and staff of the Nigerian Stock Exchange, as well as the entire capital community, I commend the board and management of Nigerian Breweries Plc for today's stakeholders platform to provide the market with information and operational developments within the organization. Given that the market is driven by timely, relevant, and accurate information, your interaction with the market through this forum is vital, and we encourage you to continue with this trend. The Nigerian Stock Exchange recognizes efforts made by the board and management of Nigerian breweries towards achieving business continuity by enhancing the organization's operational efficiency of new product lines and efforts towards repositioning the organization, thereby reassuring investor confidence in the company. We also commend the company's generous donations and interventions in supporting national efforts towards cushioning the effect of the pandemic on the Nigerian populace and efforts in empowering the youth and women in the society. At the Nigerian Stock Exchange, we continue to provide a platform to support listed companies in meeting their strategic business objectives, as demonstrated in the over 1 trillion naira raised by governments and corporates across various asset classes in the last 10 months. This shows our dedication to sustainable capital formation to mitigate the financial impact of COVID-19 and to also aid growth of business. As an exchange, we will continue to position ourselves as the African exchange of choice by implementing policies aimed at strengthening corporate governance of our listed companies and providing products that are aligned to investors' requirements in a fair and orderly market. The Nigerian Stock Exchange also continues to remain resilient in recent times, leveraging various digital platforms and innovative technology to ensure business continuity and uninterrupted dissemination of information to the market. Our technology platform and transition to complete digital trading supported our dealing members in trading remotely. This has facilitated enhanced market confidence and increased trading activities on the floor of the exchange. Despite the pandemic, the market capitalization of the NSE All-Share Index as a close of trading on Tuesday, November 19th, stood at 18.1 trillion naira, along with a year-to-date index return of 28.94%, as investors turn to the equity asset class amid low interest rates. We continue to engage the federal government on notable opportunities for the development of the capital market and provide thought leadership on more efficient ways to aid the ease of doing business in our nation. These engagements support the NSC's advocacy efforts in ensuring positive impact to the private sector and, more importantly, quoted companies. As part of our corporate social responsibility activities, we also implemented on our mask donations to several states, schools, and institutions. You will recall that in April this year, the NSC launched its Masks for All Nigerians campaign in the bid to galvanize private organizations and individuals to provide face masks to Nigerians. We are proud to have received commitments from several organizations, associations, and individuals to achieve this laudable feat. We encourage Nigerian Breweries Plc to continue to strive for sustainability by adhering to the highest standards of disclosure and corporate governance. It is our belief that with our ever-changing macroeconomic and social environment, this will position the organization to attain deeper social impact, higher regulatory compliance to shareholders. We thank you, the invited guests, for your presence today and encourage you to participate fully during this interactive session. Ladies and gentlemen, we now invite Nigerian Breweries Plc to make their presentation. Thank you.
Thank you very much, Olumide, and I would like to thank Oscar, the CEO of the NCE, and all the executive team. Thanks for hosting us. It is a real pleasure for us to be part of this event. I hope you can all hear me well, otherwise make me a signal and I'll switch the Wi-Fi connection. I would like to say that, as you mentioned, I will be co-hosting this presentation with Rob, and because of this new setup, normally we have the investors conference in about 2.5 hours. Today it's going to be a shorter time frame. I will go quite fast in the presentation to leave also some time for Rob, and especially leave time for the questions and answers. I think this is a disclaimer as it shows in the screen that we usually show about the risk of forward statements, and that we will be basing our presentation mainly on the 2020 year results. So with that much introduction, let me go to the agenda. So this is the agenda, and I'll go swiftly to the next slide, please. So let's start here. Most of you have seen, if you have joined the investor conference before, you've seen these numbers or this presentation on the brewery. But for those who haven't done, this is a quick snapshot at Nigerian Breweries. These are our numbers for the first 9 months, in terms of revenue and operating profit, also in terms of employees. Important to mention that this year we've just celebrated the 74th year anniversary. So next year it will be our 75. So it shows that this is a company that's been here for many, many decades, and it's still the leading brewing company in Nigeria. I think there's someone that hasn't muted the microphone. I think maybe Mr. Rashid. I see some noise. Maybe you can mute your microphone. Let me continue. So next slide, please. This also is important slide. It shows that we have a strong corporate governance. We are listed, one of the top companies listed in the Nigerian Stock Exchange. But we have also a very strong governance led by the board, of course, and the management team. So we comply with all the ethics and all regulations of the Code of Business Conduct. Our major shareholder is Heineken NV with 56. But it's important to mention also that we have a vast number of minority shareholders. You can see the number, more than 100,000 Nigerian mainly shareholders. That represents a lot of interest, and we take that as a very important guideline for us to really benefit and look at the interest of all the shareholders for the future. Next one. An important one, we've mentioned that before. I think one of the biggest strengths of this company, beyond its people, it's a well-diversified footprint. We have a footprint that basically is across all the regions. We have 18 sales regions, so that gives us a lot of proximity to the outlets, to the customers, and to the consumers, but also a strong footprint in terms of breweries. We are present in the west, in the east, in the north. We have 9 breweries, a malting plant that gives us a quick access to the market wherever we are. It drives a little bit more complexity, of course, but it has the advantage that giving us also a platform for reaching consumers and customers much faster. These are key brands. You can see them in the bottom of the screen per region. Nigeria is a very regional market, as you might know. And the good news is that we have strong national, but also regional brands to answer to the different consumer needs, although I will speak more about that a little bit later. On the team side, I'll go quickly. I introduced the team last year. This is a stable team now. It's been together for about 3 years. And with a lot of diversified experience from within the company and outside the company. I will not dwell on the profiles of all the members of the team for time's sake, but I will just mention that we had a new addition in the team, which is Phil Aneke. Phil replaced Chidum, who was the digital and technology manager previously, and Chidum was promoted and became the managing director of our operation of Heineken's operation in Burundi, the company called Brarudi. So Phil has joined us. She's been spending a number of years in the head office in IT and digital related projects, and we're very excited to welcome her back. She has a very long track record at Nigerian Breweries, so we're very, very excited to have her back with us in the family. With that, I pass the word to Rob to tell us a little bit about the market, and I will take it back to talk about the strategy moving forward. Thank you.
Okay, thank you, Jordi. Thanks for the introduction. As you heard from us for many years, Nigeria is and remains an exceptional market with all the right fundamentals for growth. Nigeria being the biggest economy in Africa, with a very young and growing population and with a low consumer spending, and specific for our business, a low beer consumption. It is also a challenging economy, volatile to commodities, especially oil, which influences several aspects, for example, government revenues. We have seen the economy diversifying over the years, and this is a very different economy than it was 20 years ago. 2020 has brought new challenges, starting early in the year with the oil price crisis, and then the lockdown occasioned by the COVID-19 pandemic. The inflation has reached an all-time high, with food prices being the biggest driver of this inflation. The crisis has hit hard, and we are yet to see how the economy will bounce back. Unemployment or underemployment will continue to put pressure on households' income and consequently consumer preference. The GDP growth also does not yet show signs that will surpass the population growth. Hence, we expect still a challenging environment going forward. Having said that, the Nigerian economy is also extremely dynamic. Despite the challenges, we had a very strong Q3 result and good indications that Q4 will also be very strong. We will discuss this later in our financial performance. And then looking at the beer profit pool, we continue to see a deterioration of the beer sector's profit pool. The total beer pool for all the big players is loss-making since 2019, which we believe is unsustainable. The erosion comes from a few fronts, such as affordability, which hinders our capacity to fully pass on price increases, including the recent increase in excise duty and VAT. Nigerian Breweries is now the only profitable player in the market and the best position to capture the growth. We have passed on limited price increases during this year, following the VAT increase in February 2019 and another one in Q4. We will do everything in our reach to protect the profitability of the market. To show how we are executing this strategy, I will hand over back to Jordi.
Thank you, Rob. And I will take from Rob's perspective. I think our key message is, yes, we've got a few years of turbulence, as you've seen, with the beer sector under a lot of pressure. But if you look at the future, this is a phenomenal market. I mean, Nigeria has all the fundamentals to be a growth market. And as we've experienced for many decades, this market goes down, but it goes up again. And the key question for us as a company is, do we have the fundamentals to capture that growth? If you look at some of the elements that we are highlighting in this slide, what you see is that first, we have a very strong winning culture. I will talk more about that, but through the pandemic has been a big test to prove ourselves that this is a company that has the right fundamentals in terms of people mindset, courage, passion, the agility also to adapt to the new circumstances. And we have the commercial agility. I think this is very important. In today's market, especially in Nigeria, it's many times not the strongest ones that survives or strives, but the one that can adapt faster to the changing environment. And we strive to be a big leading company, but also a very agile company, a company that can adapt itself, that can, look at what consumer is expecting from us and customers, and can deliver on that very quickly. And we are doing that throughout this year as well, as I will explain further in the next slide. Cost efficiencies, I think it's a very strong DNA of this company for the past decades, and it's the basis of which it has delivered so strong return on investments for many, many years. Not as strong now as before, of course, but that's because, and we've been still profitable, as Rob was mentioning, thanks to that cost agenda that's still very, very important. So very low prices in Nigeria, excise increasing, the whole beer sector under a big pressure, yet we are funneling all the costs back to the brands. I will talk more about that later. And finally, community. I think important to understand that in Nigeria, consumers and the population expect private companies to reinvest back into the community. And I think this is true for any company, especially true for Nigerian breweries. We have been committed to this country for decades, and we will continue to be. And our social responsibility agenda is not a separate part of our business. It's part of who we are as a company. It will continue to be. And I think consumers and stakeholders continue to recognize us as a company that really believes in the future of this country and its population. And those elements make that we are well positioned for growth, and growth will come. I will take later, but you see in a turbulent year like this one, the beer sector still will be growing, which is very good news because it means that the fundamentals, as Rob mentioned, are there as well to poise for growth when things and the economy recovers. So next slide, please. Now talking about people, we have had a big test, as I said. This year was a really challenging year. We've got many crises. Of course, the pandemic, the COVID crisis, that's still not over. Let's remember that. And other crises like the EndSARS movement that led to a crisis. But we have had a lot of flexibility, working from home, dividing teams into A, B, being sure that we can run our breweries despite all the circumstances with a lot of attention to the safety of our employees as a first priority, and that has really been the priority. And a lot of courage and passion. We've seen an incredible courage, an incredible commitment from our employees this year. It's always the case, but I think this year has been amazing. As an example, employees have volunteered not just to support the company, but also the communities with their own money, adding to the money and the support that the company has provided to the communities. We've seen employees by themselves doing that. So a lot of signs of that engagement and that passion. We are measuring the organizational climate, and I think what we've seen this year also is an increase of that climate. We've taken tough measures in terms of the remuneration of employees, starting by the top, by the management team, including myself. So it's been a tough year in which difficult measures had to be taken to protect the profitability and the continuity of the business. And yet, we also committed to all employees that nobody would lose the job. And that was a big statement we made when the pandemic struck Nigeria, and we didn't know what was going to happen to the market and to the society. It was really a question mark. We committed to that with those sacrifices from all of the employees. I think that has proven a very strong strategy. Employees have responded to that with a lot of engagement, a lot of commitment. We've been very transparent in the communication. That's been also a very strong point, very transparent with employees, with the unions. As a result of that, in the recent climate engagement, which we do every year, this year's climate engagement has been even stronger than it was last year, which is for a year like this phenomenal, especially with the measures we are taking. So we are really positive on this. And a lot of a big journey on inclusion and diversity. We are working hard to become a more inclusive and diverse company that reflects the society as it is, a diverse society with a lot of ethnicity, with gender diversity. I think this is an exciting journey. We really are passionate about this. We are not there yet. We recognize we're taking a lot of steps, but we will continue to do so. This is really important for all of us, and we see the benefits of it. In the Exco today, we have 3 women. I say always that's a start, but we need to get even more. And again, it's not just about gender diversity, it's about all types of diversity, like ethnicity as well. Next slide. I think it's blocked there.
The slide has moved, but it is not on your screen yet.
Okay, no problem. Then I will take it from there. Sorry about that. So, yeah, on the agility, let me talk about the agility part. I think it's important to understand that when the COVID came and the impact of the COVID came, one of the things we had to do is to adapt our communication. And what you see in the slide, hopefully, now we don't see it anymore, is we adjusted our communication. So our brands started to communicate not just about the essence of their brands, but also to consumers about staying safe and about the impact of the pandemic. So you see some examples of that communication in the slide. It's coming back again. Is it back? I cannot see it. Yeah, now I can see it. So next slide, I comment this one, Marcos, thank you. So we also stayed connected to consumers in more elements. So one of the things that we had to do is to stay connected through digital. And I think that's a big message we did as well. And that agility is that brands became more, we needed to connect more with consumers through other channels because consumers were not outside as much as they were before. We moved to digital as a big platform for communication. Next one. So now on our strategy to win, I would like to dwell on a few points. The first one is driving premiumness. We've talked about that before, and I will explain some of details of that. Strengthening the core, our mainstream brands, the innovation, which has been extremely important this year, and sustainability, which is, as I said, the core of our business. Premiumness, very important to us. In these market circumstances where prices are really very pressured by the consumer affordability, the elasticity of consumers, but also by the competitive environment, it's very important to drive premiumness, to drive a positive mix. And we are really committed to that with our 2 brands, Heineken and Tiger, recently launched. On Tiger, if you go to the next one, we are leveraging all the global platforms. The good news of Heineken is hopefully by the end of the year, the Heineken brand will be growing again. In a very challenging year, we will see by the end of the year, hopefully a growing brand, which shows again the resilience and the strength of this brand that is really phenomenal. And we're very happy about that. Last year, we crossed the 1 million hectoliters, and this year we fly even higher with the brand. Tiger is the new addition, still very soon. It's less than 2 years, but very exciting. This brand provides a touch to Generation Z. So it's looking at a different kind of consumer with a different proposal in terms of taste, of profile. And we are very optimistic about the future success of this brand. The signs, the early signs are also very positive. So really looking forward to the success of this brand in Nigeria. Next one. Now, I hope you can see the next one. I cannot see it. It's maybe my connection.
No, it's not there yet.
Okay. I'll pause here a little bit then. Maybe before we move to the next slide, I think on the next slide, we will talk about the core, and you can move to the next one, and Marcus, to accelerate. Basically, we say that yes, premium is very important, but let's not forget that the core of our business is the mainstream, the lager, the mainstream lager. And this year has been a year where we've done a lot of work, starting with our live brand. As you can see, this year we've renovated the brand completely. The packaging looks really phenomenal, and the consumer reaction to this is very positive. We've done an incredible work on lighting the Onitsha Bridge, which is displayed at the brand label, and it's part of the essence of looking at the future, looking at the opportunities that's very rooted in the Eastern culture of entrepreneurship, of progress and forward looking. And that's our positioning with Live, and very excited about the work that's being done this year, especially on top of the work that's done the previous year with Goldberg. And that's my next slide, where we also reworked the brand Goldberg to become more entrenched with consumers, to be more connected to the roots of the Southwest Nigerian consumers, which delivered a strong growth. And actually the Goldberg brand has been growing double-digit this year versus last year. So again, very exciting. It shows that when we do the right work, when we connect these regional mainstream brands, lager brands to the consumers, it delivers very strong results, as we have seen with the Goldberg brand this year. So we're really happy about that. Now, moving to the next slide, it takes a little bit of time, but I would like to talk about the stout. Stout has been, we are the second player in stout. There's a clear leader in the stout segment, but the work we've done with the stout, once more in a year of turbulence with a lot of pressures, external pressures, has been remarkable. We just relaunched the Legend brand with a new look, new label, a smoother taste. Early signs still, because this work has been, the new Legend launch came a few weeks back, but very positive reaction to that, and also for the whole stout portfolio. As you have seen through the life of the Legend, this has been a year of innovation, which is maybe counterintuitive in a year where normally companies would be quite conservative in not doing many things and staying calm. It's not been the case for Nigerian breweries. If you look at, for instance, our malt segment, we've launched major innovations. The Maltina has come with variants, the pineapple, the vanilla variants. We've also renovated the whole Amstel packaging, if you look at it, and we've launched a new variety of Amstel Ultra with no sugar, which I'm actually enjoying now, which is a formidable new product. And again, a lot of innovation, because we wanted to excite the malt category, which was a little bit boring, a little bit unexciting, and we thought that we needed to provide excitement. Early signs still, because these innovations have been recently launched, but we are very optimistic about it. And finally, I think on the innovation side, the energy drinks, we've been playing on the energy segment for many years with Climax, but we've adjusted our mix to be looking at the growth of the energy segment, and we are very excited as well as how the new Climax 50cl is really performing. So we're very happy with that. Last but not least, Radler had been struggling for some years. The volume was not at the level of our expectation, so we've relaunched the Radler category with a new design for the citrus and the addition of the red fruits. Again, it shows that we are really committed in this year to innovation and to provide consumers with exciting news in this mixed and flavored alcoholic beverage with low alcohol. We think there's a huge potential in this category and with Radler brand. Now, I've been quite quickly, I know, because I want to give some time to Rob and the financials and the Q&As, but I hope you can get a sense of the amount of innovation, the agenda of renovation of the brands that we've been doing this year. I think it's really impressive in any year, but especially in a year like the one that we've witnessed in Nigeria. On Brewing a Better World, just to say that this is not a Friday afternoon job, it's the core of what we are. We've continued to do it. This has been very important, especially in the year of COVID-19, and it touches about, it's about the responsible consumption, it's health, it's the every drop, it's the drop the sea, the CO2, growing with the communities and the sourcing sustainably. So on all 6 elements, we're really driving a very strong agenda. I cannot dwell on that because of time, but I really want to emphasize that. The COVID, just as an example, very active to it. We've donated 500 million nairas in cash to the various communities, state governments, the federal community and the federal task force on COVID, but also a lot of ongoing administration of our drinks to the hospitals and the community. So really a strong engagement this year, not just by the company, but the employees. I'm ending with this program. I'm very happy with this program, very proud about it. This is about an empowerment program that touches the most vulnerable part of the society, the women and the youth. It's a program we've launched this year, and it's a program that aims to give skills and support these communities in Nigeria, in around our breweries and in other areas. I'm very proud of this kind of engagement because it shows that we are really committed to the future of this country and its people. Now I give back to Rob.
Thank you, Jordi. So let me get straight to our financial performance for 2020, starting with the financial overview of Q3 year to date. You can see in 1 second. You can see a reduction of almost 2 billion in revenue. That is mainly driven by the Q2 impacts of the lockdown. We have started the year with a very strong Q1 performance, but at the last days of March, we observed a big impact on our volumes. That has been offset by a very strong Q3, which I will show in more detail on the next slide. Our cost of goods sold have increased, primarily driven by raw materials and packaging material prices, as well as volumes. Both impacted by inflation and FX devaluation, for example, sorghum and sugar prices, but also the can prices have increased. However, we managed to mitigate these impacts with our cost leadership agenda, minimizing these impacts wherever possible. We also have an increase in our administrative costs, partially driven by rolling impacts such as collective labor agreements increases, but specifically for this year, extra costs for donations and measurements to keep our employees safe related to COVID-19. Our finance expenses were impacted primarily by the exchange rates, and I will deep dive on these impacts on the impact of IFRS 16 in the next slides separately. If I'm reviewing Q3 only, you can see the impact of the strong Q3. It showed a growth of 25% on revenue versus the same period last year. We attribute this mainly to the ease of lockdown measurements and opening of the bars, as well as better weather during the usual rainy season. Our crisis management has always focused not only on how to manage the crisis, but also how to respond with agility when the market would open again. And we have proven that we were well positioned to capture the opportunities when they came. Cost leadership. In order to be able to invest for growth, we continue our cost leadership initiatives in several fronts, like revenue management, where we not only focus on optimizing our promotions, but also adapting to the different regions as mentioned by Jordi. Our innovation agenda focus not only on exciting the consumers with our brands, but also on how to optimize our product key input prices, for example, with packaging. And we continuously look for alternatives for raw and packaging materials to support the cost agenda. If we now look at the operating profit bridge from 2019 to 2020, I can give you a flavor how the result is built up. You can see here that despite the mitigations in Q3, Q2 still carries an impact on our yearly numbers. On the cost and expense side, the increase is mainly driven by raw and packaging materials, offset by lower marketing and distribution costs. The main reductions there is the reduction of commercial spend, but also a shift of our distribution costs to interest due to the adoption of IFRS 16, which we started last year. Administrative costs increased by 1.4 billion, mainly driven by the donations I earlier mentioned, and the other internal measures that we took to secure the new way of working and a safe new way of working for our people. Then moving to the next slide, to the financing costs. If we focus now on the net profit, I have already mentioned the key highlights of our operating profit on the previous slide. Our interest remains flat, driven primarily by our strategy to increase liquidity via securing more cash, either by our commercial papers program or securing other credit lines. The scarcity of FX has increased our foreign payables position. Hence, we also have the impact of FX losses with the sharp devaluation of the Naira this year. As I mentioned on the other slide, part of the distribution costs have been shifted to interest due to the accounting treatment of part of our fleet, which falls under the IFRS 16 on leases. But that is primarily a shift between lines and not an increase. If you now look at the balance sheet items, we remain with a strong balance sheet. I would like to draw attention on some highlights on our financial position versus the same period last year. First on cash and borrowings, where you see, as I mentioned at the start of the pandemic, we consciously decided to secure a higher liquidity that would enable us to be safer in case a crisis was extended for a longer period or a too long period, or some of the risk materialized, such as reduced cash collections from our customers. On borrowings, we also have the impact of the lease liability, about the same magnitude as the right of use of assets that you can see here, with the impact of IFRS 16. We have, however, implemented a big cross-functional task force for our cash management, both on maximizing the cash collection as well as managing our payables. On receivables, you can see the big impacts were through optimization of cash-based promotions. Further engagement with our distributors and focus have significantly reduced our receivables position. On the payable part, we are focused on optimizing, but always with the principle that our whole chain needs to remain healthy. So we pay on time for our priority materials, and in certain cases support our suppliers with advances. We also have partially increased due to scarcity of the FX, which has decreased our ability to pay in foreign payables. On inventories, we have two main movements. Basically, a lower stock of finished products compared to last year, where we had a higher pre-stocking strategy for the main season. And secondly, an offset by a higher spare parts stock position, as we could not perform our yearly overhauls at the same time like last year due to the movement restrictions in the country. Then moving to the cash flow. I have already highlighted the key changes in our balance sheet, which also reflect here on the cash flow. The key additional highlight here are the level of capex on investing activities. They have been optimized where we could, and we have reviewed 100% of all the investments for 2020 and prioritized the ones focused on growth, for example, focus on the investment in returnable packaging materials. We also see now an opportunity to reduce our cash position, however, still maintaining a comfortable level for any potential risk, and also keeping in mind that upcoming cash-intensive periods, for example, payment of interim dividends, that we have announced together with our results of September and in Q1, where we have also maturing instruments and some higher personnel cost outflows. I would like now to hand over back to Jordi to wrap up, and then we can move to the Q&A.
Yes, so as a wrap up, to quickly go to the Q&A, I think the important to say is that we've seen the Nigerian beer market fundamentals are very attractive, low per capita, and even in a year like this of COVID and the whole impact, the beer sector as a whole will be growing by the end of the year, both in volume and revenue. So this is a very good sign. And then the Nigerian breweries has the footprint and has the elements to capture part of or the majority of that growth. So we are committed to continue investing on growth, and we are believe that the future of the country will be and of the beverage market will be captured by us. Moving to the next one. 2020 results on Nigerian breweries, as you've seen by Rob, were adversely impacted by COVID. A strong Q1 that was disrupted by the start of the COVID, end of March, and then a difficult Q2, rebound on Q3, and we believe Q4 will also be a strong one. 2021, the fundamentals of growth will be there, so we still believe consumer is coming back into the category and into the beverage as a whole. It will still be a challenging year because the input prices will continue to grow. FX scarcity is there, and it's affecting all the companies, but we are prepared to respond to that because we have the right people, the capabilities, and we are focusing on the commercial agility for the company. So with that, I would like to pause it here and I think leave for the questions.
Thank you very much for the very insightful presentation. We'll quickly go to the question and answer session now. We have quite a number of them, and we're also very pressed on time. We're racing to 2:30 for the closure of the market. So the first question I have here is, what is majorly attributable to the rebound in beer volumes? How did COVID-19 impact the operations of Nigerian breweries, and how did Nigerian breweries adapt its business model? I want to direct these questions to the CEO.
Okay, quick answer. I think on the rebound of the market, what you see is, of course, after lockdown, usually consumers go back and there's an effect of confidence back after a period where consumers were asked to stay at home or there was a stringent consumption, bars were closed down. So it gives a chance to get consumers back. On the long term, one of the things we see is that the affordability is there. If you look at the beer sector, the price increases for the beer sector have been very minimal over the past years, over the past 2-3 years, which makes our category very affordable today to consumers, equally for the beverage sector, I have to say. So it's not just the short-term element, which is there from COVID, but also the longer-term element of affordability. Population growth is also there, although we never mention it enough, but this year is another 5 million people reaching the legal drinking age, so 5 million additional. So there's a lot of factors that make that there's growth potential, and in Q3, especially the consumer confidence after the lockdown. On adapting ourselves, we've mentioned it during the presentation, a lot of elements. Of course, cost avoidance and reducing some of the costs was necessary. Cash management, very important for us, cash management, because we didn't know how the year would respond. Happily, we are seeing that the impact of the COVID has been really slowed down in Q3, and focus on consumer and customers. I think those were the key elements. I could dwell on it for a lot of time, but if you want to be more specific, I will also be more specific in the answer.
Thank you very much, CEO. Just a bit of some questions, a few questions on the numbers, and I would like to direct this to Mr. Rob, the Finance Director, saying what is driving cost of sales pressures for Nigerian breweries, also indicating that sales rose by 25.5% year-on-year in Q3 2020. Is it FX scarcity or higher input prices? The second one is, what is management's strategy to reduce trade and other payables?
Okay, so thank you for these questions. It's a very good question. The first one on the impact on our cost of goods sold. It is two things. So the easy part is the volume. Our volume in Q3 has grown by exactly the same percentage as our cost of goods sold. So that is one of the bigger drivers for the fact that you see the same trend in the cost of goods sold. Having said that, it is also clear that due to the devaluation and the FX scarcity, that there is pressure on our input cost. If you look at the main elements where that comes out, it is sorghum, it is sugar, and it is cans. Sorghum is although produced fully locally. It is impacted by the FX effects, because when the prices go up, also the sorghum is somehow linked to the dollar trend that you see. So those are the biggest drivers for prices. It's also clear that we continuously focus with the full supply chain how we can further optimize and mitigate any of the price increases that come from input prices or from FX scarcity. That was the first question. The second question was on the ability to pay. So there are two elements there. We have said clearly at the beginning of the pandemic that we are in a chain of partners, and that not only the future of Nigerian breweries is important, but also we need to make sure that our chain of suppliers is properly maintained. And we have set clearly the target for ourselves that we will pay all our suppliers on time in full to make sure that they can also sustain the pandemic. In some cases, we also gave them additional support by giving sometimes prepayments to make sure that they could also continue production. That helped us building the partnership, but it also helped us maintaining our flow of products into the market. On the other side, we are continuously managing very actively the payable positions per supplier, and managing that we pay them, let's say, according to the agreed amounts, and we are managing what I said already at the same time.
Okay, thank you very much for providing those clarity. The next question I would also like to direct to Mr. Rob. What is management strategy? Sorry about that. What is management strategy on finance cost and debt management? We have seen a 43.2% year-on-year growth in finance cost despite the low yield environment, also followed by a 139.7% year-to-date growth in total borrowings powered by commercial paper. What is management target debt mix, long-term and short-term?
Okay, so thank you for this question. As I presented before, at the beginning of the crisis, we took a very conscious decision to increase our liquidity. We did that from two sides. We did it by, let's say, extending or more usage of our commercial papers program, but also by securing other credit lines. We are now already, let's say, 6-7 months further in our journey through the pandemic. It is now also clear to us that we see now opportunities to bring down our borrowing level and our cash levels to a level that is more suited for the current situation.
Okay, thank you very much.
Because it might be lost in the total numbers, but as I presented, and you have seen the slide, there's also a clear impact of IFRS 16 from the lease agreements that we have for the trucks or the distribution costs. That has an impact on our financing cost as well, which is a shift from distribution costs.
Okay, thank you very much. Another question, this one is from Fikayo, where Fikayo is asking, Heineken, Nigerian Breweries parent company, announced plans to implement cost mitigation actions across its local operating companies, which involves reducing all discretionary expenses while providing sufficient support behind its brand and route to market. How has this affected Nigerian breweries? Amid then a following question, amid surging input costs and FX scarcity, is Nigerian breweries ready to pass the cost to consumers, or want to bear the cost for some time, considering the fact that the consumer wallet is pressured?
If you want, you can take the first one, Rob, and I'll take the second one.
Cost measurement, so you can say about the bonus.
So, like we said already during the presentation, we have worked this year very hard on taking all kinds of cost measures to make sure that we could sustain the pandemic and the impact of that on our business. So there were quite some measures taken. There were, let's say, cuts in the bonus schemes, or they were stopped for the period. There were all kind of other reductions, like I mentioned, on the marketing expenses. So we really focused on bringing down the cost level in the organization. We have done quite a good job there. And looking forward, that has enabled us also to offset some of the input cost increases coming from FX scarcity from the market. Going forward, we will follow the same strategy, managing our costs to an optimal level, and by a very agile approach to our, let's say, procurement side, maintaining the impact of FX scarcity of the cost of goods sold.
Okay, let me take on the pricing. We took a price increase at the beginning of the year, and we have continued to take some tactical prices increase. But of course, it remains a very challenging environment with a high price elasticity and also a strong competitiveness for market share. So we cannot take all the price increases we would like to pass on the input prices. The whole beer sector, just to give you an example, was providing about 30 billion naira in excise 3 years back. And last year, it provided 60 billion naira in excises, so double the amount of excises. And last year, the beer sector delivered a negative net profit. So it shows that the whole beer excise increased significantly, doubled in 3 years. And yet the beer sector was not passing, and it went into net profit, negative net profit as a sector. So it shows the pressures that the beer sector is enduring from an external point of view and also this competitiveness point of view. Yet we have a strong portfolio, and this is a key advantage we have, which allows us to take prices in different SKUs and different brands. We are continuing to do so. We just announced to our trade partners that we will be taking another price increase in December, so next month, of some selected SKUs. So in any occasion we can do, we will continue to take price increases, but we will always monitor the competitiveness of the situation, also the consumer ability to take all those prices, which is always limited in Nigeria, especially during these times.
Okay, thank you very much. We have another question here from Fola Abimbola. Fola is asking, how much of the VAT element increase have been passed on to prices, and what brands experienced the increases?
So, like you said, the VAT increase was 2.5%. Also linking back to what Jordi said about price elasticity, we have looked at the individual cases where we could move with our prices on specific SKUs during that period, and also after that. So there's not a clear-cut answer on that on SKU or brand level. It's a pure mix of all the different products and all the different price points, let's say, offset by our insights on price elasticity that we have. So yes, we took into account the VAT increase, and yes, we have tried to pass it on where possible to through the chain. However, like also mentioned before, passing on price increases in the Nigerian market is something that you have to approach flexible, and we have a very agile way of doing that, and we look at it on a month-by-month basis. Where we see opportunities, we will move.
Thank you very much for those answers. I have two questions here from a couple of questions from Tristan, and is asking, Heineken Corporate has announced a strategic review, and in addition is looking to reduce some of the layers at corporate and regional level and regional layers. Oh, sorry about that. Reduce some of the layers at corporate and regional level. What does this mean for Nigerian breweries?
So Heineken has announced a review of the strategy that's really centered on consumers and customers, which we are really engaged with. And also on the cost side, indeed has announced some measures to reduce the head office structure. And across the OpCos, we have a clear targets and clear indications of where we need to go in all the different elements, support functions, etc. So we will strive to manage our cost and to adjust our cost to meet those targets and those stretch targets. And indeed, next year we will also do that with the engagement with employees, with the unions, to explain what are the measures that we are going to take, and we will take them together. But yes, it will continue to be a year where we will stretch our costs in all matters, not just the support cost, but any other cost that is not really adding value to consumers and to customers. It will be a year of a high cost agenda next year, for sure, in Heineken and especially also in Nigerian breweries, for sure.
Okay, thank you very much. Another question, and this is from Richard Mather. Richard is asking, what is the role of the local premium brands, Star and Gouda, in the more regional portfolio strategy? Can they play a national role like Heineken or Tiger, or do they also need to be more regional, or is their role long-term limited?
Yeah, it's a good question. I think what we've seen is the emergence of these regional brands that have really emerged as a key choice for consumers, and brands like Star and Gulder, which had a national position, still have a national position. If you look at the distribution, numerical distribution of these brands are very high. So numerical distribution-wise are brands that have a very wide spread, yet consumption is lower because their pricing is also higher. We still believe in these brands. They add a higher profitability to our company than the regional brands, so we still want to invest in them. Of course, the focus on the regions will be those regional brands because those are core for consumers today, and the market has shifted. What used to be those economy brands have now become the mainstream brands. But we are still fighting, and we are still looking at the growth. Star grew again last year. We see Gulder doing very well this year. And our idea is to differentiate these brands, to make them something that has different meaning from consumer, that they're local brands, where in an occasion they can pay a little bit more for them. As the questions were asked before on pricing, I think it is very important to have a price ladder of brands that answer to different consumer needs. And that's what we're trying to do, to keep these price ladders with, the regional brands, which have an entry price, but then have the Star Gulder with a higher price, and then the premium portfolio. And this is helping our mix as well, because we talk about price increases, but we should also talk about mix improvement. And part of the mix improvement is playing with these brands.
Thank you very much, CEO. By my time, we're just 1 minute and a few seconds away from market closure. So right now, I would like to hand it over to Mr. Bolumole. Let me also reiterate that we're expecting that after the closure of the market, Victorian will make his remarks to give a response to some of the conversation that we've had today. So Alhaji Yusuf, please be on standby immediately after market closure. We will come to you. We have a couple of questions that are still unanswered. I would apologize. And maybe in the course of the remarks by the Doyen, if the CEO and also the Director of Finance want to personally respond to some of those messages, they can type in, direct answers to them. So at this point, I would love to hand it over to Mr. Bolumole, if he's still here with us, to please coordinate the closing of the ceremony. Thank you.
Thank you, Toby, and thank you to Yodi and team for really having a very robust engagement with the market. I see by my time, we have about 12 more seconds before the market closes. So I'll just count down and tell you when you are able to close the market. So Jody, over to you. Please close the market.
Okay. Thank you very much.
Thank you. Doyen, I'll pass it over to you now for your comments. Alhaji Yusuf, are you there?
Alhaji, you would have to unmute your mic. You have to unmute your mic.
Thank you very much, Toby. And I'd like also to start by thanking and welcoming Mr. Jody Bonnet Bell and Mr. Robert Clay Jan. I thank you for coming to the Nigerian Stock Exchange and giving us a lot of information about your product and also about how you foresee your company moving in the next few months. I'd like to also, on behalf of the stockbroking community and Nigerian Stock Exchange, that we are quite happy with the information that you have provided for us this afternoon. It's been long in waiting. We had always wanted you to come and tell us what is going on within your company and how also you have been reacting to the challenges within the market. This you have done today. You have given us a lot of information about your strategy. You have also given us a lot of information about the challenges that you have experienced in the past and your expectation of what the future will be. Your brand is a very well-known brand and very well received by both investors and the stockbroking community. And this is the kind of information that we like you to provide on a constant basis. We don't want to wait to ask you for several years before you come and share with us whatever the information that you have. And in saying that, I also want to draw your attention to the fact that why sharing information is very strategic and important to us is that the key factors in determining prices on the Nigerian Stock Exchange are based on three major factors. One is your published account, which of course you have been sending to us and we have been analyzing and reflecting in your account. But more importantly about your operation is also the fact behind those figures. And that is what you have partially shared with us today. But we want it to be on a more constant basis. Because the more you share with us, whatever the challenges you have, or whatever the prospects you have, or whatever your strategies are, the more we're able to reflect those information on your pricing. If you do not share it with us on a constant basis, you are creating room for the third basis of determining price on Nigerian Stock Exchange, which is the public hearsay. I don't think public hearsay does anybody any good, and we don't really want to have that. So that's why we prefer the first two options for us, and that's why we're appealing to you. We have gathered a lot of information from you this afternoon. We have seen that your management is trying seriously to make a very good turnaround. We have started seeing some positive result that is reflected in that flow. It is our hope and the hope of the investing public that now that you have identified your challenges, now that you have started mastering those challenges, then the turnaround that the market has been expecting of a really first-class brand like yourself will, in a very short time, materialize. And it is on that note that I want to congratulate you for the effort you have been putting to turn around the company and also to wish you a very prosperous future so that your shareholders can continue to support you. The broking community and the Nigerian Stock Exchange can continue also to support you. You are welcome. We'd like to see you in the next few months. Thank you very much for coming.
Thank you. Thank you so very much, Alhaji Yusuf, for those wonderful remarks. Thank you to our guests, the executive management team from the Nigerian Breweries and also from the Nigerian Stock Exchange, led by Mr. Lumide Bolmole, the divisional head of listings business. I want to sincerely also thank everyone who's joined us today, both on Zoom and also on our YouTube channel. For as many people who could not take their questions, apologies to that. We hope that we have this as often as possible, and there will be room for you to engage with the management, the executive management of the Nigerian Breweries. Thank you so much. And I want to say that this meeting has now ended. Thank you.